Welcome to Illuminati Silver. We tell it the truth about silver. Today is Tuesday the 28th of April 2020, and yesterday we published a video entitled British Prime Minister Boris Johnson returns to work and suggests that we keep battling on. And on Sunday, central banks reporting this week on economic stimulus measures. And we've put links to both of these in the description box below. Now, the time of producing this video is 2020 GMT +1, so it's quite late for us this evening. And we're going to provide a brief financial update as to what has actually happened today. But first, we shall read an article written in Reuters just a few hours ago. Reuters article dated April 28th, 4:37 p.m. Gold falls to near one-week low, gains in equities weigh. By Eileen Sereng. Gold prices dipped to a near one-week low on Tuesday as investors moved towards riskier assets, encouraged by signs that restrictions were easing. Spot gold was down 0.8% at $1,700.41 per ounce by 11:13 a.m. EDT. After falling as much as 1.4% earlier in the session. US gold futures dipped 0.5% to $1,715.40. Quote, with stocks higher, a lot of the flight to safety money that went into gold, or is in gold, some of it coming out and going into the equity markets right now. Unquote. Said Bob Habercorn, senior market strategist at RJO Futures. From Italy to New Zealand, governments have announced the easing of restrictions. More parts of the United States look set to restart business, though Britain has said that it is too dangerous to relax a stringent lockdown for fear of a second outbreak. In the United States, a record 26.5 million Americans have filed for unemployment benefits since mid-March and are likely to push the unemployment rate to 16% or higher in the next jobs report. World stocks rose to their highest in almost 6 weeks as plans to ease lockdowns offset more chaos in oil markets. Quote, any dips in gold should be bought up pretty quickly. Countries are bailing out entire industries. Interest rates are at near nothing. That's not going away anytime soon, unquote, Habercorn said. Gold tends to benefit from widespread stimulus measures from central banks and governments because it is widely viewed as a hedge against inflation and currency debasement. Quote, weak physical demand is currently offsetting all the positive hype about gold. And with that, there is a risk of a period of consolidation and perhaps even lower prices, unquote, Saxo Bank analyst Ole Hansen said. Quote, overall, however, we believe that the reasons that have brought gold to these levels will not go away when lockdowns are eased, unquote. Investors will now look for any forward guidance from the US Federal Reserve, which meets later on Tuesday, and then makes its announcement on Wednesday. The European Central Bank meets on Thursday. Elsewhere, palladium fell 0.4% to $1,917 per ounce, and platinum gained 1% to $765. Silver dropped 1.6% to $15.03. End of article. Now, currently, before the close, the Dow is up 70 points. And has surpassed the 24,200 level. And the S&P 500 has reached 2,880. But of course, this can change slightly at the time or before the close. Brent crude stands at $20.49 and WTI crude is only $12.83. Who could have imagined that just a few months ago? The dollar index is down just slightly at 99.85. Now continuously hovering around this 100 level. And gold stands at $1,705 and silver at $15.11, providing a gold to silver ratio of just shy of 113 to 1. Now, on the economic front, in terms of economic news, advanced trading goods for March has been reported at minus $64.2 trillion, compared with minus $59.9 billion in February, so a deterioration of approximately just over $4 billion. And the Consumer Confidence Index for April is 86.9, which is well down from 118.8 in March. Now, tomorrow we have GDP figures for Q1 for the United States, but more importantly, the FOMC announcement on interest rates and its monetary strategy, and Jerome Powell's press conference after it. Now, technical analysts are suggesting that from a day trading point of view, there is support for gold at 1680, and any fall to this level could provide traders, and certainly short-term traders, a good buying opportunity. Silver seems to be range-bound between the 20-day EMA at 1510 and the 50 EMA at 1550. You see, the $15 level is seen as strong support. But our opinion is that if the dollar can strengthen above the 100 in the dollar index, we could see silver actually fall or breach that $15 level on the downside. Not dramatically, but could actually rest a little beneath it, perhaps even hovering closer to 1450. However, that said, the levels of financial stimulus being announced around the world and a number of central banks due to report or at least declare their monthly intentions, this should provide a degree of underlying stability for silver when then being considered as a monetary metal as opposed to an industrial metal. But without doubt, all eyes are in fact on the Fed tomorrow. Now, just out of interest, in the United Kingdom today, British Airways has announced that it is set to cut up to 12,000 jobs from its 42,000 strong workforce due to a collapse in business. So you're essentially looking at about 25% or more. Some 373,000 property sales are on hold owing to the lockdown, and the value of held sales totals a collective £82 billion, researchers at property portal Zoopla have estimated. Interestingly, agreed sales, property sales that is, are running at 1/10 of the normal level for this time of year, and were akin to the activity seen in late December, they said. Those of us in the UK realise and appreciate, historically, spring is usually a busy time for the housing and mortgage markets. And also another slightly different issue, people have reverted to shopping the way they did a decade ago by making one big weekly trip to the supermarket, and this is according to the boss of Tesco, one of the UK's major food stores. How relevant that is of course the issue of social distancing, and people do at least appear to be abiding by it. So there is no doubt much for all of us to consider moving forward as people begin going back to work, whether it be in America or in Europe or eventually in the United Kingdom, and the economy starts to develop again. We should, in our opinion, not have too strong an expectation that things will get back to normal quickly, or even to the level at which they were just a few months ago. To mop up the enormous levels of unemployment, particularly in the United States, in a few short months, will now be almost impossible. And so, in our view, any economic recovery is going to be a long and potentially tortuous road. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting, of course, that we update our Richard and Greg channel every other day or every few days. And so if you haven't already done so, please subscribe to that one too. And we are planning another update tomorrow on that channel. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.